When you look at gold, well, there's a few things. First off, the stock market is going higher with just a basket of stocks, a handful of technology stocks doing most of the heavy lifting for the S&P 500 and the NASDAQ. But when you go and you look at precious metals, gold is through the roof. There's a really interesting comparison chart. If we share my screen here, I can show you there's two charts that I can share. The left chart is the candlestick chart, is the S&P 500 back in 2007, just as the stock market put in a major top. The yellow line is the price of gold. Now, both of these were rallying together. And when you see gold dramatically moving higher with the stock market, it's a big red flag. Yeah, I mean, there's a lot going on. There's a lot of fear in the market, fear of, depending on which space you're in, right? People have fear of the stock market rolling over and crashing. When you go to the precious metal space, there's a lot of fear of people missing out on a huge move higher in gold, silver, and the whole precious metal complex. So there's a lot to unpack. I mean, depending how you want to go about this, like I like to look at the stock market, the S&P 500 as a whole, because that to me is, if money's flowing into the stock market, it gives us a pretty clear direction and asset class to follow. If money's moving away from equities, then usually it's flowing somewhere else. It's always looking for a return. Could be bonds, could be a currency. In this case, it's definitely looking in money's going into the precious metal space. So, when we look at the overall stock market, it's making all-time highs. It's close to potentially making highs again here shortly, but it's really so Magnificent Seven driven. It's not the healthiest of markets. Everything's pretty frothy. Valuations are really high. I think most people probably agree with that, but you don't want to fight this trend. So, there's some mixed signals. Precious metals telling us something big and bad is brewing, but you don't want to be picking a top in the equities market just because, gold's warning of some catastrophe just around the corner.
Today's stock market highs are mostly thanks to a narrow group of mega-cap tech names. Their dominance paints the picture of a market far from healthy. While the index reaches new peaks, underlying breadth is weak. Small caps and micro caps languish. That divergence often signals a vulnerability. Coupled with the rally in metals, such patterns suggest a rotation. Money may be quietly exiting the conventional winners. As alt-tech bubbles inflate and valuations stretch, terrain that once seemed stable could flip quickly. The warning signs, mobility from stocks to metals, are already emerging.
Yeah, I mean, the Magnificent Seven, they still have good earnings, and it's like every day you hear about a new massive investment in processors and things for the AI space, and it reboosts and re-energizes. I think it's a pretty frothy space. When you look at the amount of investments going into any business related around the AI space, it's made everything else dwarf all the previous bubbles, from Bitcoin to fintech, which was huge. All of that, everybody just wants to get into the AI race. So to me, it's a sign that it's getting pretty frothy, and I think we're going to see this momentum eventually stall out. And when it does, it's going to be ugly because everyone's piled into the same stocks. And what happens when that emotional group of everybody chasing returns? What happens when the momentum turns around and it starts going down? Those same traders usually start to sell out in a panic. And of course, when everybody hits the sell button on the same group of stocks, they drop very quickly. The markets or price drops faster, about 4 to 7 times faster than it goes up. So the herd mentality, once the momentum changes, it's going to pull the Magnificent Seven down dramatically, which means the stock market is just going to go into a free fall mode also. So it's going to be exciting times. This is going to be there's a turning point here where people are going to have a life-changing event where they either avoid a catastrophe, which is fine, or they actually profit from the collapse in the markets, or they potentially, eventually lose their shirts. We're going to see a big reevaluation event at some point when this bull market comes to an end for equities.
When markets rise on momentum, the herd charges in. When they pivot, panic erupts. History shows that downturns accelerate much faster than rises. Today's frenzy around gold, silver, and mining shares echoes past cycles. Money chasing gains, valuations chasing fewer fundamentals. The question, when the direction changes, who gets out in time? The very same crowd that pushed prices higher will often cause the sharpest decline. That makes timing and discipline vital. For investors, it's not about avoiding risk entirely, but being ready to act when the tide turns.
I thought the markets were going to top out a long time ago. I kind of always have this perma bear kind of mentality, always looking to be protected and have a game plan for if and when something rolls over. And the reality is the stock market always is going to have a financial reset. So it's not a matter of if there's going to be one. There will be one. We just don't know when, and we don't know what's going to be the trigger to cause it. So I always have this defensive driver kind of mentality. You're always checking your mirrors, looking around, making sure, there's danger all around you driving a car. Well, same with the investment space. There's dangers everywhere. Something could blow up in the financial system, the economy, anywhere. And of course, everything can collapse and fall in value very quickly. So I'm always looking like, oh, this is giving us a warning sign. This could happen. If this happens, we're going to have a huge reset, a huge collapse. So I'm always kind of trying to get people prepared to be mentally, have a strategy in place, because most people won't do anything until things have already sold off and started to collapse. And then, of course, they all have the same mentality, which is like, well, I'm down so much already and I might as well just ride it out, which could take years and their price could still fall dramatically from where they are. So I always have this perma bear kind of mentality saying, hey, always be prepared. But again, you got to ride the trend higher. So we've been long the equities markets. We keep riding it to all-time highs. But I'm aware that eventually the music's going to come to an end. And one of these pullbacks in the market is going to turn into the major market top and a multi-year correction that wipes out most retirees' life savings and their lifestyle and all of that. And that's what I try to protect people from.
Market corrections aren't rare. They're inevitable. The issue isn't if, but when and what triggers it. Defensive strategies aren't about fear. They're about readiness. That means not just holding assets, but having plans. Too many investors wait for the crash to show before responding. By then, it's often too late. The current alignment, frothy equities, metals rallying, narrow market leadership suggests we're closer to a significant inflection point. Staying alert, staying diversified, and watching capital flows becomes crucial as the next phase unfolds.
To me, one of the biggest barometers is really the precious metal space. When you look at gold, well, there's a few things. First off, the stock market is going higher with just a basket of stocks, a handful of technology stocks doing most of the heavy lifting for the S&P 500 and the NASDAQ. But when you go and you look at precious metals, gold is through the roof. We could, there's a really interesting comparison chart. If we share my screen here, I can show you there's two charts that I can share. The left chart is the candlestick chart is the S&P 500 back in 2007, just as the stock market put in a major top. The yellow line is the price of gold. Now, both of these were rallying together. And when you see gold dramatically moving higher with the stock market, it's a big red flag. Something's wrong. People aren't trusting the financial system. They don't trust the governments. They don't trust currencies. They're worried about all kinds of things. So when gold starts to just take the lead and run higher, we need to be aware that there's something unfolding that we're not going to like, and it's going to be hard on the economy, probably the stock market. Now, if we take a look at the chart on the right-hand side, we have the same. We've had gold rally for this, last year and a half. We've had the stock market rally hitting all-time highs. The really interesting comparison when we look at these two, now, the market environment is different, like the economic environment, and it always is for every major market top. But this is what I want to share and kind of show where we're at. So I've just added a whole bunch of charts down below. We've got gold miners, we have silver, we have platinum, and we have palladium. And what happens here is we've just, back over here, we started to see a bunch of money pile into gold miners. We saw a bunch of money pile into silver, into platinum, into palladium, and then they all went and had a little bit of a pullback. Now, these are all weekly charts. And this is as the stock market was just putting in a major market top. Gold was testing all-time highs. And what's interesting is if we were to drag forward, let's just look at the stock market and gold here. Stock market fell about 20%. And gold continued to rally. Gold had this very, very big move. I'll just backtrack a bit here. Stock market put in a top. Precious metals went higher. And if you take a look, you'll notice gold miners down below rallied. Silver rallied like over 50%. Platinum and palladium both rallied over 50%. And then once the stock market momentum really stalled out and the tide actually changed, we saw the stock market collapse and it fell over 50% and it pulled the commodity space down, which generally in a recession, almost everything goes down. And so the same thing happened. All the other commodities sold off 50, 60, 70, 80% during that reset. So if we just backtrack here, Anthony, and look at kind of gold hitting highs, the stock market showing a little bit of weakness, and we look at to where we are today, look at where we are today. We've got gold miners have had the big move, silver. We've seen platinum, we've seen palladium. They've all just recently had the little bit of a pause or pullback, and they're starting to push higher. And of course, that's real. We're getting kind of right into this phase where we could start to see a very big move up in the precious metal space. And this is usually going to be the signal that the stock market is on the cusp of a major market top and selling off. So this is my biggest barometer. When you see the whole world moving away from the financial system and buying physical gold and silver, that is a sign that big money is trying to protect themselves because they see or sense something bad unfolding in the economy. And like the whole world, really, gold is the global barometer. So this isn't just like United States or Canada based. This is gold tells us like something is wrong across the board and people are trying to protect their capital.
A striking signal. Gold is accelerating while the broader market still marches upward. Historically, when gold leads equities, trouble is brewing underneath. This isn't just about price action. It's a reflection of trust shifting away from paper promises toward tangible assets. Silver, platinum, and palladium are joining the move. The combination of narrow equity gains and broad metal strength suggests big money is hedging for something larger. When the money exits the system that depends on confidence, metals become the refuge. Gold is speaking loudly, and perhaps the rest of the market will begin listening.
I think we're going to see precious metals continue to move higher. I think the stock market, it may push a little bit higher, but I think it's running out of steam. If the Magnificent Seven weren't so powerful in terms of how much they control of the indices, this market I think would be struggling in a pretty big way. In fact, if we look at the small cap stocks like IWM and we just kind of look into the more recent price action, this pullback that we had, it was fairly significant. It broke down through the 50-day. It's kind of bounced up and it's stalling through a lot of price action here. Another one to look at is the microcap stock market. It broke down even more. It's had an even weaker bounce. So money is really changing its momentum. It was pushing into growth stocks a few weeks ago. Now it's really not recovering like it should. We generally want to see small caps and micro caps leading the market higher. And they have kind of broken down into a downtrend. They're now into resistance and showing signs of weakness, yet the Magnificent Seven are still, and the S&P 500 are still looking kind of bullish. So this is an early warning sign. You still need to be long equities here. This is still just a pullback, and we just need to see if this is, the start of a new downtrend or if we're going to go higher. And you have to have a game plan to identify when to jump ship and get out of equities if it does roll over the next week or two.
The narrative isn't about doom, it's about evolution. Money moves, systems reset, and value returns to fundamentals. For investors, this may be less about timing the exact top and more about positioning for a new era. Precious metals aren't just hedge, they may become central. As equities age, technology bubbles expand, and money seeks safety, the value of real assets glows. Whether you ride the current wave or step aside, the story unfolding is one of change. Adaptation, not panic, will define who arrives in the next cycle intact and potentially positioned for gains others miss.